Fariza, can you explain to us about the Ahmad chargeable income and tax payable?
To find the chargeable income and tax payable for Ahmad Ali, we first calculate his gross income. His employment income is 95,000 ringgit and he also received a petrol card worth 3,000 ringgit as a benefit in kind. The company laptop is exempted since it is provided solely for work purposes. Therefore, for his gross income is 98,000 ringgit. Next, we deduct the allowable tax relief, which includes self-relief, education fees, spouse relief, EPF contribution, life insurance, and child relief. After applying these deductions, Ahmad's chargeable income is reduced to 68,000 ringgit. Based on the progressive tax rate, his total income for tax amounts to 3,480 ringgit. However, since Ahmad has paid zakat on his income of 1,700 ringgit and saving of 500 ringgit, this is allowed as a rebate. As a result, his final tax payable to LHDN is only 1,280 ringgit. This clearly shows how zakat payment and personal reliefs help to significantly reduce an individual's overall tax liability. To explain more about the zakat calculation, I'll pass this to Amira.
Okay, let's go through how we calculate zakat on income and zakat on gold. So first, zakat income. Ahmad chargeable income is 68,000 ringgit and the rate is 2.5%. So 68,000 ringgit multiplied by 2.5% equal to 1,700. That's the amount that he needs to pay for zakat on his income. Now, you might wondering why I straight away take the chargeable income of 68,000 ringgit. Why not minus had kifayah or the basic living things? Allowance? The reasons is simple. In this case, not only specific relief and deductions were given like EPF, life insurance and child relief. Since the question did not mention about had kifayah, we don't apply it. That's why we use 68,000 ringgit as the base for zakat on income calculations. For your information, zakat can also reduce your tax. In Malaysia, when you have pay zakat to an approved authority like Lembaga Zakat Selangor, it can be claimed as a tax rebate under Section 6A subsection 3 of Income Tax Act. So, in this case, Ahmad already paid 1,700 in zakat on income. This reduced his final tax payable to the LHDN. In short, zakat not only fulfill our religious duty, but it also gives financial relief. It's like hitting two birds in one stone, which is spiritual benefit and financial benefit. It's a double win. Oh, Fariza, I have a last question. Can you recommend a strategy for future tax efficiency?
For future tax efficiency, Ahmad can maximize available tax relief. For example, he can open an SSPNI account for his children, which allow him to claim up to 8,000 ringgit in relief while saving for their education. Since Ahmad is pursuing master's degree, he can also maximize lifestyle relief by spending on books, journal and newspaper with a limit of 2,500 ringgit. These expenses will also support his studies. Furthermore, he can register his younger child in a child care center or kindergarten, which provides an additional tax relief of up to 3,000 ringgit. By planning ahead with these strategies, Ahmad can reduce his tax payable.
Case study 2 is about Eco-Fresh Agro Partnership. This partnership involves two individuals, which are Aisha binti Abdullah, a Muslim partner with a 60% share, and Jason Tan, a non-Muslim partner with a 40% share. Their business is inorganic vegetable farming and distribution. The partnership reports an annual gross income of 420,000 ringgit. And importantly, only Aisha pays zakat for her share of the profit since she is Muslim. So Azwar Hakim, please show the computation of adjusted income, each partner's tax liability and business zakat for the Muslim's partner share.
The business recorded a gross income of 430,000 with allowable expenses of 210,000. This results in an adjusted income of 210,000. After deducting capital allowances of 25,000, the statutory income stands at 185,000. Based on the agreed profit sharing ratio, Aisha receives 60% or 111,000, while Jason receives 40% or 74,000, it is important to note that in Malaysia, partnerships are not taxed as entity. Instead, each partner is taxed individually on their respective share. Applying the progressive individual tax rates, Aisyah's tax liability on 111,000 is 9,900 before zakat rebate, while Jason's tax liability on 74,000 amounts to 4,460. This ensures both partners are taxed fairly in proportion to their income. As a Muslim, Aisyah is obligated to pay zakat on her business income at 2.5%. The zakat payable on her 111,000 share is 2,775 under Income Tax Act. This zakat qualifies as a tax rebate. Therefore, Aisyah's net tax payable is reduced from 9,900 to 7,135. Jason, being non-Muslim, is not subject to zakat. Lokman, what is the advice on possible agricultural incentives and zakat payment arrangements?
The first one is Eco-Fresh Agro should have reinvestment allowance since the government of Malaysia provides reinvestment allowance to companies or partnerships that engage in agriculture who reinvest their profits into approved projects such as expansion, modernization or diversification. This incentive could encourage the business in the long term to grow sustainably and efficiently while reducing their tax burden. The second one is Eco-Fresh Agro should facilitate zakat arrangements at the corporate level by maintaining clear accounting records of profit distribution so that Aisyah zakat can be calculated transparently to avoid any disputes and to ensure Sharia compliance. Case study 3 is about Teknova Sendirian Berhad, a company fully owned by Muslim shareholders. Teknova operates as a renewable energy solutions provider with an annual revenue of 1.2 million ringgit. Additionally, this company is eligible for a 70% income tax exemption for 5 years under Green Technology Service Provider. And importantly, this company pays zakat on its business income. So Khairul Nisha, please show the computation of statutory and chargeable income, corporate income tax payable, and zakat payable on business profits.
Okay, Lukman, there are a few steps in calculating statutory income. The annual revenue 1.2 million ringgit should be minus the allowable expenses, which is operating expenses of 600,000 ringgit to get the adjusted income. Next, the adjusted income should be minus the capital allowances since it is a business source. Since there are no other income source to add because business income is only one source of income, the statutory income is equal to the aggregate income. The answer for statutory income is 550,000 ringgit. Other than that, the question states that Teknova is Green Technology Services Provider. Hence, the company is eligible for 70% income tax exemption for 5 years. The exempt amount is 550,000 ringgit multiplied with 70%, which get 385,000 ringgit. So, the taxable income is 165,000 ringgit. Next, calculate corporate income tax payable. According to the Inland Revenue Board of Malaysia, Teknova can qualify as one of the small and medium-sized enterprise and falls under the factory categories. Since the annual revenue of 1.2 million ringgit is well below 50 million ringgit, Teknova qualifies as an SME. Therefore, since Teknova has taxable income of 165,000 ringgit, the first 150,000 ringgit is taxed at 15% and the balance of 15,000 ringgit is taxed at 17%. The total of corporate tax payable is 25,050 ringgit. Lastly, about zakat payable. Since the company is fully owned by Muslim, it is mandatory for the company to pay the zakat obligation on their business income. The amount of zakat on business income that they should pay is 13,750 ringgit. The amount is obtained by taking the statutory income of the company multiplied with 2.5%. So Lukman, based on your opinion regarding this company, can you advise the strategies to optimize tax and zakat compliance while maintaining ESG goals?
The first one is Teknova should maximize the tax incentive since they have a benefit of 70% tax exemption on statutory income under the Green Technology Service Provider incentive. So Technova should ensure that all relevant activities, expenses and projects are accurately documented and submitted to the authorities for ongoing eligibility. This may involve making additional investment in renewable energy initiatives such as solar panel installation, which would strengthen their eligibility for the incentive. The second one is Technova should align with ESG goals by ensuring their funds contribute towards poverty reduction, community empowerment, or agricultural sustainability initiatives. This means Technova could operate its sales operation while fulfilling its religious duty. For example, funding programs that support rural communities with access to renewable energy solutions.